Hello and welcome to today's morning report on Thursday the 12th of March with me, Rich Perry, market analyst at Handtech Markets. These European trading markets have just got up and running and, well, they're a bit mixed actually. The FTSE's bounced quite strongly, and the reason that bounce has come is due to this dollar that has started to correct back, and that correction in the dollar is feeding through to a rally in commodity prices. And FTSE is quite well weighted in commodities across energy and also basic resources. About 28% of the FTSE is that. So we're seeing a strong rebound in the mining stocks on the back of that. So FTSE's up. DAX is down though, interestingly enough. The Wall Street markets were lower overnight, again finding a bit of a struggle. And that struggle on the Wall Street actually... I'll show you first of all this dollar index, which actually has come back from 100, which we saw overnight. That 100 is the first time we've seen that level since all way back. I think 2003, is it? Come on, here we go. Crikey, yeah. Good lord, yeah, 2003. So yeah, a long way ago we saw this level on the dollar index at 100, but the equity markets in the States are still under pressure with this strong dollar, despite this minor correction that we've seen in the dollar overnight. Yesterday we had some strong increase in the VIX. VIX increases suggest volatility, which also suggests that traders in the States are beginning to take on more covering for their portfolios on the short side, just in case of a big correction, and it seems to be the case. Rising VIX generally tends to be weak for stock markets, so that is interesting that that's continuing to happen in the US. Now, as I said, this dollar has been on a massive run in the last couple of days, or last few days, and a slight correction we've seen today, not really scratching the surface of the rally that we've had. But I'll talk across the euro sterling and also the Aussie, which is my chart of the day, which is an interesting move. So lots of interesting moves on these forex charts today, and I'll try and get through to them quickly. And also gold as well, which is rebounding. Now, in terms of what we're looking out for today, we've got the US retail sales data. That retail sales data comes out at 12:30 today, because obviously the hour difference in terms of daylight savings time shift. And the expectation is for 0.3% month on month, which actually would still be a deterioration on the last month's year-on-year data, which is 3.2% at the moment. That would be down to 3.0% if that came in month on month for 0.3% up. And the interesting fact on this chart is that the last couple of months have obviously been in sharp decline, but also have missed estimates as well. Now, we had consumer confidence in the US recently coming in and declining, actually back from recent peaks. So that'll be interesting to see if that feeds through to the retail sales data. That retail sales data is generally considered to be probably the most important data this week. And the last real bit of data that we see for the US in front of this in front of the FOMC next Wednesday. So this could be an interesting number today, could provide a bit of direction for the markets. Also this afternoon we've got the weekly jobless claims as well. Last week we had a jump to 320,000 actually. That was the highest since the first half of last year. Wow, almost May last year. So that is an interesting number that's coming out. The weekly jobless numbers are starting to just rise slightly. Interesting, but the expectation is today for 305, so a slight dip back again, but still that's above 300,000, which generally speaking, back towards the latter part of last year, you would have said that above 300,000 would be in a bad number, as we saw a definite falling trend. But now it seems to be more stable and arguably even rising on the weekly jobs numbers. So that would be interesting to see what number that comes with out today. So my chart of the day is the Aussie. Now, Aussies had unemployment overnight, and it unexpectedly fell to 6.3%. So that was higher than expected. Better than expected on unemployment. So that's strong for the Aussie, and we saw the Aussie rallying on the back of it. Now I've drawn in this line here at 76.80. Now that is obviously a very important near-term resistance, because it was old support on the 9th, became resistance on the 10th, and it's again hit today. Interesting, 76.80 as resistance. Now the key resistance, you'd say, is 77.40. That is the old key floor that we saw for a while there, for several weeks actually on the Aussie, and it's also became resistance on the way up back again on the 9th of March. Now that is the key resistance. So I think I'm still of the opinion, looking at this daily chart, that any rally really is a chance to sell. Ideally, I suppose if you're looking at the daily chart, you'd be selling up at the 77.90 area, which is where that downtrend currently comes in. But as I said, the bears are still in control, and the chances are you're probably going to see that falling over before then. So I think if you got 77.40, that would be excellent. I think as a selling area. Look at this RSI that's only just started to unwind again. Remains in very negative configuration, consistently falling over around that 50 point. And it's just unwinding back from that. You've got a stochastic just beginning to turn up as well, so that's reflective of this little near-term bounce we've had on that employment data. But I still think this is pressure to the downside. Ultimately, I still think that this is any sort of rally is a chance to sell, and that's what I would be looking for myself. So at the moment, you've got the resistance coming in at 76.80. Which is again just unwinding these oversold hourly momentum indicators as well. And it'll be interesting to see if we see a sell signal between 76.80 and 77.40, because that is certainly 77.40 would be your key near-term resistance. Anyway, I wish you good luck in your trading on the Aussie today, and I will speak to you later.